Hello everyone, this is John with the Tayeb Group, and today is Wednesday, Real Talk with JT, and I have a very special guest, Sami Kabir from Guidance. I appreciate for coming.
Thank you for having me.
Sami was here already last time. This is the second time because there's a lot of questions which unfortunately we couldn't cover it. So I asked him to come for the second time, and so basically we will talk about the qualifications, the differences between the Islamic way and the traditional way, see if there are some differences in terms of qualifying for that type of financing, then the process, what is the difference in terms of the process and type of loans, because I know you guys have different type of loans as well.
Right, different type of financing programs.
Okay.
Yes.
So Sami, what are the qualifications for the buyer? What's the process in terms of the qualification?
First of all, Assalamu alaikum everybody, and I like the suit.
Well, we actually matching. It's funny, we didn't talk about it. We both in the blue today. So
yes. So the qualification process that everybody asks for, that because it's Islamic financing and it's not a loan, how does the qualification work? And I like to give comparison and give the answer. Islamically speaking, if you want to invest with someone and that person needs to purchase your share from you, wouldn't you want to know that that person has a source of income, right?
If he can afford it.
Right, if the person can afford it. So the qualification process got to be there. Then number two, wouldn't you also want to know that how are my dealings? Do I make my payments on time? Am I accountable? So that goes with credit, right? So you like to know credit.
Do you owe money to someone?
Right. Back in the days, it was a close community, and it was easier to find out. Have you dealt with this person? If not, if the person hasn't been up to the commitment, then I'm not gonna go and get involved with this person. But that was then. But nowadays, father doesn't know how his son's finances, right?
100%.
So that's where the credit comes in. A lot of the people have this misconception that having a credit card accounts and having credit profile is riba, and you need to stay away. Well, the reality is that we need to stay away from carrying a balance and paying interest on it. But if you have a credit card for the purpose of building a credit and pay the balance every month, what do you use? You're building a credibility. Building a credibility, according to the scholars, are fine as long as you're not diving into riba, you're not paying interest on the principles that you are taking. So you can build your credit that way. So we do look into your income. We also look into your credit and see your credit worthiness, and based on that we make our decision that how much of financial investments we're going to get into as a partner with you. So that's one thing. And if you want to look at it the other way compared to the conventionals, yes, your income is a factor and so is your credit. So income and credit is looked into.
It's very similar in terms of qualifications. And in terms of the credibility, actually, it's a good thing. You need to have a credibility, right?
Yep.
Especially if you're looking to get financing from someone.
Yeah.
So you check the credit, you check the income, you check the pay stubs, the money in the bank.
Right. When we look into the income, we do look into your employment, types of employment. Okay. You could be a business owner, you could be a W-2 employee, hourly employee, wage earner, a taxi driver. At the end of the day, whatever you are reporting to IRS and you're paying taxes on, that's called taxable income. And that's the taxable income we consider. We don't consider what you make and you don't report. We don't cash is not accountable, so we won't be able to verify. So we don't look into that. We don't have those fancy programs where you deposit money into the bank account for months after months, and that is considered income. We don't do that.
But you don't report that income on the income taxes.
Right, and it's not reported, so it's kind of contradictory.
It's a gray zone.
Right, gray zones. So we stay away from gray zones. As far as pay stubs are concerned, we do look into we verify employment, make sure that your current income and your income for the future is secured before we get into a investment. And we have greater risk because regular banks, like I said in our previous show, regular banks will take a loan from the federal government at 1%, 2% rate, and then the same principal they will forward to the consumer and charge you more. For them, there's no accountability because if you go foreclosure, the insurance is taking care of them, the government is there, you are getting out of it, you sell the house, lien,
and many times they sell the loan before once they close on the house, right? So
it's not like that with us because even though we have investors, silent investors that we sell it to, Freddie and Fannie, but at the end of the day, if the mortgage doesn't perform, meaning the homeowner cannot make the payment, we actually buy it back from our investor. Then we deal with it according to our agreement, which is Islamically,
nice.
That we don't put you on a hardship, in harm's way. We are very careful of that. So then the Sharia aspect of the fair play comes in.
It looks like you're taking a lot of the burden from the buyer's shoulders onto yours.
Right.
There's actually a question regards to that from Asif. Assalamualaikum Asif, how you doing? We already got some viewers actually. If you guys can hear us good, just give us some likes, give us some hearts. If you got any questions, please ask us. So we get a thumbs up so they can hear us good.
Yes.
Okay. So Asif was asking, do you require 2 years tax returns or 1 year tax returns for self-employed Goldu?
Okay, both. So let's say you are self-employed, Asif, and you are in the business, same line of profession for 5 years and more. At that time, we will only take your 1 year income, which is the recent year, and we'll qualify you based off of that. Let's say you are in the business for less than 5 years, 2, 3, 4 years. We will take your 2 years tax return, average it, and we'll qualify you based off of that.
Okay. And for W-2s?
W-2, we just take your most recent pay stub income. So if you have received a raise, guess what?
Bam, you're getting a raise.
Good news for you. So that's the income we are going to use.
Also, let's say if somebody applies in June half of the year and they just got a big raise, they got a promotion. So you're just gonna take the last month pay stub. So you're not gonna even look at the last year income tax?
No, because that's your past income. Okay. This is your current and future going on forward. That's the income we are going to use. And also, let's say you're a student and you are a physician or a lawyer, or you are a student or have done some sort of education in the line of the profession that now you're employed in. 30-day pay stub, you will qualify. So for those who are entering into the workforce, has some sort of education, we don't look into the time frame. You could take a certificate, let's say a home health aide, takes a 2-year course, or 3 weeks course, gets a certificate and gets a job. We'll take that education, certificate, we'll verify it, and 30-day pay stub, you're qualified. You don't have to work for 2 years just to qualify.
Because the traditional loans you have to show, you need to be 2 years on the job or same field at least, right?
Right. You don't have to be for 2 years.
Okay.
Yeah.
Well, you see, these are the little nuggets which, makes a big difference. Sometimes difference of getting the financing and not getting the financing, right?
Right.
So, do you still have to look into 1230 clear on latest before approving?
Do we have to look into what? I'm sorry?
Do you still have to look into 12
times 30 clear on latest before? Yes. What if? I think the question is about
if you can clarify the question, because that's very terminology. It's hard for me to understand.
So the question what I see is that looking at 1230 clear, I think the question is if you're on a mortgage late, you have a mortgage and you've been late for 30 days. We need to make sure that for the recent 12 months you had no mortgage lates. then we'll finance. So that's the same guideline as the investors, Freddie and Fannie.
Well, Asif has another one for you.
Good.
Do you offer? Well, Asif, first of all, thank you very much for asking the questions. It means a lot.
Yeah.
So the question he has: do you offer any rehab loans?
No, we don't get into rehab only because it's very involving. And the reason for that is we are not a regular bank where we have the money and we're going to invest in and hold it in-house, portfolio it, wait for it to be completely constructed and convert that mortgage into a regular mortgage and then package and sell it. Because we're not a lender, we're not a bank. In our previous show we clarified that we are a private equity firm, so we don't have that luxury. So in a short answer, no, we don't have rehab loans, 203K.
Okay. I mean, that makes sense because like you said on the previous show, it's just only for somebody to buy the home and you become a partner with him, right? So the home is not ready to be moved in yet.
Let me clarify, Asif. There are a lot of customers who are buying homes that are REO properties, short sale properties, and those properties do not need a lot of work. You don't even need 203K. Let's say you need some painting jobs or some repairs, minor, that would cost you anywhere between $10,000-$12,000.
So what's the limit? Is there a limit on it?
Yeah, a property that, it has to make sense, and we use a common sense underwriting, meaning in terms of how much of a repair is needed. Now, if the repair is not more than $10,000-$12,000, we'll still finance that property, and then we will give you about 45 to 60 days based on negotiations with the attorneys and all that. We'll give you some time to fix it. So we will close in escrow, meaning that we'll hold the 1.5 times of that cost. We'll hold it in escrow, and then we'll allow you to fix it. Once you fix, send us a proof of the work is done, and then we'll release the money. So
to the seller or to the buyer?
Well, it depends on how the negotiation is done. Sometimes the seller is actually taking the responsibility, or sometimes the buyer is saying the seller doesn't want to do anything, and I need to buy the house. I love the house. I'm getting a great deal, but I do have some money, so I will put it on escrow, and I'll use a contractor who's going to do the work. And then once the work is done, we see it's done, we release the money, you pay the contractor.
Nice.
And you're done.
Okay, so that's another option.
Yeah.
Does your appraisal estimates that cost to repair?
Now, the appraiser is a third party. We all know no appraiser works for us. So they're third party. They are going to give you an estimate.
Like traditional.
Yeah. So appraiser is going to give an estimate. Majority of the time, appraiser's estimates are very high. You have the opportunity to go and work with a licensed contractor and get his price, and then you can submit that.
Okay.
So we don't go by the appraiser if you have a contractor. I suggest you will have a contractor because
100%.
Your contractor has most accurate cost, and it could be a lot of the time is lesser than appraiser. Appraiser is not a contractor. He's going to give you a market price, and that's typically higher. So if you have a contractor, it's much easier for you to finance as well. You don't have to tie up a lot of cash.
But they do need to be licensed, you said, right?
Have to be licensed.
Licensed.
Who wants to do work with non-licensed contractors?
I'd be surprised. There's many people.
There, I believe you.
So, I mean, why don't we go into the process? What's the real process and the differences in the process, between the Islamic one and the traditional one?
So the process is typically the same, because the process needs to be the same, as I said, qualification, credit, income, and all that. The way we handle it, let's say you have a buyer and you want us to qualify the buyer, or you are the buyer and you like to get qualified. You contact us. You know how to contact. Our contact information will be shared. So you contact us over the phone or in person. We will ask you a series of questions over the phone. As long as you can tell us verbally, how much your income is. Based off of that, we will give you a pre-approval. We'll issue it. We'll immediately send it over to you by email. As soon as we hang up the phone or within the time that we are talking, it will be sent to you. So it's instant. This also can be done online by yourself. You can go to our website online. You can apply immediately. Based on the answers, questions you answer, our system will issue you one. The difference between the one that you can get yourself online and the one that we can issue you is more in depth, because we ask a lot of questions, different ways, and based on our experience, we'll give you the one that makes sense more, that we also can vet on it based on your disclosure of your income and credit and all that information. Then, let's say you're qualified. You take the pre-approval, you go with John, look at a house. Once you see the house, John says, okay, this is the deal, this is what the seller will accept, you have an understanding, offer is accepted, you contact us and you tell us that, hey, Sami, or one of our team members, that offer is being accepted, what's the next process? We will give you a list of documents to provide along with an application. It's a PDF fillable form, you don't have to print anything, you fill out the PDF and you follow the instructions on what are the documents that are needed. Typically, 2 years tax returns, W-2, pay stub for recent 30-day, bank statement for recent 30-day, copy of the ID, and that's it. So you send it over to us, we will review. Once we review, we will pre-underwrite at that moment and we'll right away tell you that you're good to go. John is gonna call us and say that, hey, Sami, how is this customer looking? Is he good? We'll tell you that yes, he's good. Move forward. Now, sometime customer has challenges. Let's say credit score is in the borderline, income is on the borderline. So we don't like to waste anybody's time. So what we have, automated underwriting, LP and DU. Those of you who are in this industry, you know what it is. So we have automated underwriting system. We run it through. Once we run that through, it takes few more minutes with the customer on the phone. We get an approval. It's 95% guarantee. It's done unless there is some issue with the title or whatnot, or you quit your job.
Their occupation, right? Things happen.
Yeah, you quit your job. You buy an expensive car. You increase your
Credit,
debt. Right. So unless those things don't happen, you're pretty much done deal. That is almost like an assurance that you're fine, good to go.
We got 3 more questions actually from Asif. Again, Asif, appreciate it. Asif has a lot of questions. So
Asif, what are you do? What do you do for a living?
You really, he's a realtor actually.
He's a realtor, great.
He's a realtor / investor. That's why he was asking about the 3K. So the question he has: can you have a non-occupant on co-borrower?
Yes. So we allow, let's say the buyer, the original applicant, by him or herself, the debt to income ratio is 55% if the customer is W-2 employee. We will allow a non-occupying co-borrower who's not going to be on the title, not on the contract, who's just co-signing. We will allow that. Let's say the customer is self-employed, then he himself, if the debt to income ratio is up to 70%, we will allow you to add a non-occupying co-borrower. So in other words, let's say the customer is not qualifying by himself and the customer is a W-2 employee and the debt to income ratio is 55%, we can allow. If the debt to income is more, case by case basis, we'll look into it and we will analyze it further and we will try to work it out if that happens. But the rule of thumb that we have within the company is that 55% debt to income ratio, then
benchmark.
Right, benchmark, and for self-employed 70%, which is very helpful because we understand self-employed customers do have a lot of income. They just choose not to show. So we understand that we give that benefit to those customers, right?
Yeah. Another one, borrowers who switch between self-employed and salaried position in the same line of work, what will be required?
Just 1 year history. So meaning that if the customer was a W-2 employee in IT business, has been in the business W2, and now he recently just opened his own business just to do better, financially better. And he just has to show 1 year of tax return and you're fine. Now, let's switch it the other way. If it's the other way, it's easy. You've been self-employed, you're not doing that great, you have a company who decided to hire you and put you on a W2, 1 month pay stub, you're in.
But the qualification you will be basing upon as self-employed or as W2, let's say if they have two at the same time, because sometimes people they're self-employed plus they're the employee of the company, right?
A lot of the time, actually, even yesterday, somebody calls in and says that I was employed, my tax return shows this was my W2 income. Now I opened up, so you're gonna take my all W2 income and this, and I asked that, let me ask you this, the W2 income you had from the previous company, are they still paying you? The answer is no. So why you're expecting that income to have an expense equal to that income? You don't have that income. So why would you take on an expense, right? So meaning that whatever the past W2 income you had, it's not present anymore and it's not continuing. You just started a new business. We are going to take your 1 year of self-employed new income, new business income, and we'll qualify you based off of that. We're not going to take the W2 income because that doesn't exist anymore.
But how about if you have the W2 previously, you still have the W2, but now you have self-employed income as well?
That's fine. So that changes. You have a W2 income, so your most recent current W2 income will be taken.
Okay.
And now you also have started a business. And that business is 1 year, it's not 2 years yet to prove that you will be able to sustain or you're going to fail. So it needs to be 2 years.
2 years.
So it changes. But if you were doing, let's say, IT job and you quit your job and you became self-employed only, 1 year of that self-employed is okay. But if you're parallelly continuing your job and you just opened a side gig, that side gig for 1 year is not enough to prove that it's stable. Because what if the next year it fails and your income that you have to support the business from that income, then you have a whole lot of liability.
Yeah, that makes sense.
Yeah.
So the other question is, how many years out of bankruptcy will you be able to accept to do the loan?
Well, it has been 7 years, everybody knows, 4 years in some cases. It all depends on the credit profile. You filed your bankruptcy 2, 3, 4 years. We have seen after 4 years or 3 years, the credit profile is so great, our automated underwriting system accepted it. So if it does, you're fine. If our system doesn't accept, because we don't do manual underwriting, we do everything automated.
The AIs.
Right. So everything automated. Our system accepts it, you're in. If it doesn't, it doesn't. We have a first-time home buying program where the main applicant has no credit.
At all?
Probably very
low.
Limited. And there's a co-signer in the family member, and we used it, and it worked fine.
So they had a good credit, established credit, his credit is very new.
Yeah, with somebody who doesn't have. So there are cases that are like, wow, is it possible? And yes, we have done it.
So that's a good thing. The other thing, we have another question. Is there any major difference between guidance and other institutions that offer Islamic financing?
Big difference. There are other institutions that are out there who offers Islamic financing, and they do not use the same Sharia program that we use. It's not our program. The Islamic contracts are out there, like we talked about in the previous show. There are different types of Islamic contracts that are out there. Musharaka contract is the most viable and practical and scalable contract is out there to use in the United States. Here in America, in Morocco, Saudi, Malaysia, most of the Middle East countries are used what is known as Musharaka. Musharaka can be sold as sukuk in the market for shareholdership and for investors to come in so that you can scale that service. Murabaha is not scalable, Ijara is not scalable. So there are other companies that are out there are offering Islamic finance with compromising Sharia, such as if you are buying and selling Murabaha program, they're still selling it out in the secondary market where it violates the Sharia law, because Murabaha has to be owned by the bank because it creates a debt. Debt cannot be sold according to Sharia. So Murabaha program is not 100% authentic. The ones that are offered here, I say it with...
They use it still in US, we talking about, or worldwide?
Yeah, it is used here in America.
Okay.
Murabaha program itself, don't misunderstand me, is a viable contract. But the way it's done here in America, you have to sell it to a secondary market, then you're compromising the Sharia aspect of it.
Okay.
You cannot sell it. And you have to be the lender. And as a bank, you have to be the lender, and you have to hold that loan. Here it's being sold. And also you cannot refinance. You cannot set an agreement that if you want to refinance, then I'll forgive you the loan. Sharia says that you cannot pre-plan to forgive somebody in an agreement. It only has to arise at the time of the hardship. So if the hardship is there, then you can decide it's on you. But you cannot pre-plan it. So there are a lot of shortcuts are done to practice Murabaha program here by other companies in America, which is not approved by majority known scholars. There are some scholars who agrees that it's okay, but those scholars have disagreements with the main IOFI and AMJA.
Somebody was calling, so we're back.
We're back. So yes, so Murabaha is not doable.
Okay.
Ijara is a viable contract in some other countries, but here in America, which bank can own a property and then lease it to you? There's no bank who can own. Freddie Mac, Fannie Mae does
buy
allow
it first and then sell that to you, basically.
You know, if you're going to give me a house to lease to own, you have to be the owner to give it to me.
Yes, yes.
If you're not the owner, how are you going to give it to me? Banks are not the owner of the property. So Ijara also is not a viable contract. Musharaka is a viable contract because we come in as a partner with you. We don't give you a loan. So we come in as a partner with you, and you need to buy our share over a period of time. We still have the right to sell a percentage of our share to an investor who is going to be a silent investor, cannot change the agreement that we already made. So the agreement is Sharia compliant. It remains the same, doesn't get changed, and it's not a loan. It doesn't convert to be a loan like the other Islamic banks will tell you it's Islamic, but when you go to the public record and you pull out a promissory note, it's a loan. You pull your credit, you see you have a loan from Capital One Bank, and it's a promissory note based on interest. So halfway it's halal and halfway it's not. So these are shortcuts. Guidance has been tried and verified time over time by scholars after scholars globally and here in America.
But how do you guys record it then on the property?
It's a non-recourse, not a promissory note.
Okay.
It's an Islamic contract that you sign at the closing. Same one will be recorded at the title, and you can pull it up. Public record is there available. You know, public record is not a secret. You can go to Acris.
Yeah.
Any customer who closed, you're going to see the same Islamic contract. Has no mention of interest, no mention of loan, nothing of that sort, and it's not a promissory note, and hence it's not riba, and it's not a loan based, it's a partnership based. We are on the title with you. We record a separate title from the LLC corporation that we create, and then we record it together with you as a homeowner. So it's from the beginning till the end. You know, we made sure that the process is very, very clear cut, and it stays away from anything that has a doubt of riba.
Yes, yes. I mean, like you said in a previous video, there's few different banks, but Guidance is probably the biggest one.
Guidance
US
is the biggest one. We have financed for $5 billion right now.
$5 billion
$5 billion. We are in the business for 15 plus years. We started in 2002. We are in 29 states right now operating, and each state we need to operate, we have to get approved. It's not just
licensing and stuff like that.
If it was conventional, we'll be doing in 50 states.
Easy.
So
easy.
So, we are not conventional, so that's another, and every state has to approve us. As far as the programs are concerned, so we do 30-year program, payment plan 30 years, 20-year, 15-year. We have programs for first-time home buyers or second, third, fourth, fifth, sixth-time home buyers.
I think what we can do, Sami, I'm sorry to cut you off. We're already wrapping up, but if you can come another day, we can just solely cover the programs, because I know guidance offers some tremendous programs and really different programs actually, which are in many aspects actually easier and better to qualify for than the traditional banks. So I mean, Sami, you guys doing an amazing job, and
thank you.
I really appreciate you for coming by, and thank you. If you guys have any questions, please comment in below, and Sami and I will make sure that all the questions will be answered. It's always a pleasure. Thank you guys.